Anyway,
All right, let's play some Queen's Court. This is a segment we do each and every Tuesday where coaches who are here on a halftime report bring a stock idea, an investment idea, a trading idea, whatever it is they feel like they want to pitch to the Queen, some kind of opportunity or concept. And Queen Emily here, the head of the Dynasty Investors Trading Lab at Tackle Trading, head of the Women in Trading Group, she gets to judge whether or not it's good enough or bad enough. And if it's not, she chops their head off. Queen, where do you want to start here today?
Well, I'm kind of scared with Matt over there with that sword, so I think I'm just going to have him go.
it's intimidating.
I
We'll have Matt go first.
Yeah, it's a wise choice. Oh man, sometimes I wish I did live 800 years ago. Okay, let's go ahead and let's go with my pick. So, like I said before, you know where kind of my head was at, but I really think we just need a little bit more time just to really solidify the gold space, especially with GDX. So what I did do though is we all like healthcare, correct?
Mm-hmm.
Yeah.
Like everybody likes healthcare.
Top rated sector.
One of your favorite economic stats is the increasing percentage from a GDP perspective that
I love
the
that.
healthcare space has. It's one of your favorite stats. Can you
That's
give that
right.
stat, please?
Yeah, when I was born, in fact, I was telling Coach Keith about this yesterday. I studied this a couple of years ago when I was reading an economics book, and when I was born in 1979, the GDP percentage that the healthcare sector represented to US GDP was like 7, 8, 9%, something like that. 8%, let's call it. Today in 2021, it is 20%. 19%, somewhere in there, and is projected to go higher over time. The amount of money that we spend on healthcare is a lot. It is a huge part of our GDP. It's expanding and it's not going away. There's a reason why every parent in the country, if their kid says, I want to go into healthcare, they're like, yeah, you'll get a good job. I mean, that's like the instant, you'll always have work, right? You have stability because it's a growing sector, and not only growth, but also as an expanded part of the economy.
100%. Thank you for that backdrop. So my pick today was, I was looking at the healthcare space and a pick that I really, really like from a combination of short-term plus intermediate term, swing trade, position trade. I like it as a position trade, but the company I'm looking at is a healthcare company, healthcare plans, and that is United Health Group. And what I like about United Health Group is a couple different things. Number one, let's start with the technical analysis. First and foremost, in recent history, last Thursday, you officially did see a breakout on both the daily and the weekly time frame. And so when you go out to the weekly time frame, what you're going to see is a little bit of a cup and handle type technical formation, which is a extremely good continuation bullish pattern. When you see the breakout of that continuation pattern is typically when you see what we call a traditional leg in the market. And that's when you break out and run and see a traditional leg up in the marketplace. You see this in recent history, breakout on the weekly chart outside of consolidation. What occurs? Next 7 out of the next 8 weeks, up. So weekly consolidation breakouts are extremely powerful. I like this one even more than the previous one, because when you were looking at the previous breakout here, you had ran from the very, very lows of 320 all the way in 4 consecutive weeks coming into that 365 handle. You eventually break out of 365 and then you run up into that 420 handle. And so you got about a 60-point range on the breakout. But again, you did run from a very deep distance here and you still achieved a good 60 points on the breakout. Here you have a more traditional cup and handle technical formation on the weekly chart. And what I like about this is, unlike the MW formation we saw on the previous consolidation breakout on United Health, what you're seeing is a cup and handle where the distance you're running into the breakout isn't already, once again, going from 320 all the way to 360. It's not a 45-point movement going into that. What you have is you have a 15-point movement going into the breakout. And so I like the distance, and that's because I like the pattern a little bit more. This is more of a traditional WM formation where you could see a breakout either way. It's a longer term K trade type scenario. Whereas this, you're only looking at that resistance breakout. You got it last week. Now let's go on to the daily chart. A lot of times when you see that breakout, what will occur is it will establish a higher level of resistance on the daily chart and reset the daily chart to give you another opportunity. We call this a Cody special, where you have that quick snapback, come down, retest support, confirm before you start that weekly opportunity where it's up, 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 up. So I like the combination of analysis here from a day trade to a swing trade. I do like both time frames, but I do like the position trade because it's United Health, and the type of analysis I like the most is that weekly chart. Now, when I was looking at this I'm certainly looking at this from a directional opportunity perspective because the combination of the daily and the weekly strength from a technical perspective. Cash flow, you can cash flow United Health, but you could have been cash flowing United Health any way you wanted to for the last 8 months too. We're talking direction here. And so from a directional perspective, I thought, and where volatility is in its cycle, you really don't have volatility concerns. You're looking at implied volatility at 26, 21, just not a lot of concern there. And when you look at volatility around the 20 level, you could easily just go out there and buy a call option and be perfectly fine and not even worry that you're paying too much of a price. When you go to the at the money call option, and I'll go out to more of a traditional time frame, 115 days here. When I go to a traditional at the money call option, we're only paying about 4% of the equity price, maybe 3-4%, which is nothing, which is absolutely nothing. However, here's earnings. We are 6-7 weeks in front of earnings. And what's volatility do typically as we get into earnings, YouTube?
Is slides. So you're at this point in the volatility cycle where you've already had the volatility crush. So it's not going to be at an extreme, right? It's going to be at the lower part of the chart, but it will fade for a while and then eventually build into it at some point.
But we're not in the fade analysis. The fade analysis is all over here.
Sure.
Right. You're into the building of volatility analysis. This is where you like straddles. This is where you like strangles. You have volatility fairly low at 21 right now. More than likely, you're going to see volatility go back up into the 30 handle as we approach those earnings. Mm-hmm. What that means is that even though you can still go buy a call option, I probably want to offset that a little bit and sell something against it. And so you are very easily can go out there and just buy that 430 call option, pay $17.80 and be perfectly fine. You are not paying too high of a price, right? You're just not. You're paying less than 5% against the equity price for 115 days on a contract with that volatility at 26%. You're perfectly fine. Again, I just like bull call spreads when you're talking about a stock at 424, where you have some volatility that may increase over the course of, not a lot, just may increase a little bit over the next, 4 or 5 weeks. And so from a technical perspective, here's what I like. I like the breakout. I don't need to recover that. I like the breakout. I like the candle confirming it today on the Cody special on the daily chart. Here's what I like. I like a stop loss underneath 420. Cheap risk. Mm-hmm. I like a stop loss underneath 420. I like a target in the 470 to 480 range. And I couple that with a little bit of potential average yield plus an analysis on the breakout and how far it can run on breakouts. And so I got a 470 to 480 target. I got a stop loss anywhere under 420, but you could easily put it underneath that 20 SMA on the weekly. We know how much Mark loves the 20 SMA on the weekly. Mm-hmm. You can easily just manage that stop loss underneath the 20. As long as it stays above the 20 weekly, you're fine. But when you're looking at from an option perspective, here's the pick, my queen. We're looking at buying the 430 call option, 115 days to December. We're looking to sell the 470 call option, So we're looking to offset our $17.80 by bringing in $5 of cash flow. Now, I don't feel that 470 call option is going to be called out. It's most likely going to be worthless once December hits, but we're most likely managing this trade before that ever even gets there. Okay. So again, I like the breakout. I like the coupling of the analysis of the daily and the weekly chart. I like a bull call spread 115 days out in December, buying the 47 delta 430, selling the 470 call option with the 19 delta. Now, one of the reasons I chose 430 and 470 instead of 420 and 460, which would be more traditional, is I wanted to sell the 470 call option. That's my target. I wanted to sell that 470 call option. And so just to make the deltas work, that forced me to do a 430 instead of a 420. And that's, and for those of you that know rules based on delta, that's all I was doing there. So once again, the technical analysis is a weekly breakout coupled with a snapback on the daily. The strategy on United Health would be a bull call spread with the stop loss anywhere underneath 420, target 470. The actual trade would be a long 430 December with a short 470 December. That is my pick, my queen.
Well, thank you very much. I will let you know my thoughts after Tim goes.
Sounds great.
I'll talk to my sword as you think about it.
Whispering sweet
I
nothings.
can't. I got to give it a name. But go ahead, Tim.
Listen, if you're gonna have that sword in your office, you at least have to watch a few episodes of Forged in Fire and see how these men make these swords.
I watched Rome. I'm good.
There you go. We're going to stay with a theme here today. UNH, obviously, a really, really good candidate. Healthcare is our top-rated sector. This one's in healthcare plans. I'm going to go into a different area in healthcare, though. We're going to go into medical devices. You know, Medtronic reported earnings today, had a nice little fire-off response from it. Obviously, MDT is looking at an overall long-term breakout. That one caught a lot of people's radar. That one easily could have been a pick here today, but it's not the one that I chose. I chose something similar in this sector and industry, and I went with a company called Boston Scientific. And Emily, you've been in our community now for quite some time. You remember the Tackle 25 over the years. BSX was a regular, member of the Tackle 25, I believe, through 2017 through 19. Might have even been before that. Matt, I have to go back and check the tape on that. But I know we removed.
I would say Boston had 4 years.
A 4-year stretch.
It was there for quite.
It did not get removed for fundamental reasons. It got removed because there were better picks.
That's right. It's about just really there was a lot of strength in this area. And I remember these conversations Matt and I have at the end of the year. Matt's finalizing the list. We're all analyzing this data. And it comes down to, well, this one or this one. And it really, some of them are tough calls. It had to get removed, but it's still Boston, a very, very sound company.
Boston had some short-term fundamental issues. Right. But there wasn't anything concerning. They'd had some valuation concerns. And even though I feel like that valuation is going to solidify itself over time, there was better fundamental picks in the space that you could do cover calls on that didn't have that concern. So yeah, it wasn't anything too negative against Boston though.
Yeah, that's right. But with that in mind, though, I do want to start with some of the drawbacks here before I start focusing on the things that I like about it, because there's so many things I like. I'll just get the bad news out first here, Emily. It does have a pretty high PE ratio right now. This is a medical device company that obviously is dependent on new orders, new purchases, hospitals picking up devices, all that kind of stuff. They don't make any equipment that deals with COVID. So think about 2020. So here are these hospitals around the world scrambling to try to treat this disease, this new thing that's out there that has become the focus of everybody. BSX, they had their revenue dip a little bit here. So the particular nature of this company's products, it led them to a down year in revenue and a down year in sales. In fact, 2020 revenue was down to $9.9 billion, down from 10.7 the year before. Earnings came down quite a bit as well. Those year-over-year comparisons brought the PE ratio to where it's now at an extreme level, 120. I'm not as concerned about that. as maybe the headline of that is going to point out for a couple of different reasons. Number one, it's a $60 billion company I've been tracking for the better part of a decade that just does revenue every year. And their revenue projections moving forward are back into pre-pandemic levels. They are improving. In fact, I went back and I reviewed their most recent earnings report. They increased guidance, reaffirmed it, and said revenue will be in line moving forward. So I do want to point that out. PEG ratio currently is high. PE ratio currently is also high. Forward metrics on those, the forward PE, I believe, is 23 right now. So for a medical device company, as this thing gets back into its regular normal operations of business, which it's currently doing, by the way, I think you're going to be fine from a valuation perspective. Now let's focus on the good parts here. Number one is, Matt, give me a big picture chart. Daily chart doesn't do it justice. This is not a swing trade.
There's a number that stands out.
Yes, it is. 46. Okay. Here's a stock that, like everything else, got destroyed in March of 2020, had to battle back. Here we've been improving. We're now moving towards the all-time high, back into its longer-term trends. And Matt, if you even back this out to like 10 or 12 or 15 years, real big picture, I think what you're going to see is a pretty consistent trending stock when it is in those healthy environments. That was when it was so strong through that decade. We took that year off. Here we are now, W pattern on the weekly into a long-term breakout at 46. This grabs my attention as an investor. It grabs my attention as somebody who's traded and owned this stock many, many times in the past, and also somebody who's done covered calls on this stock a lot. See, the Tackle 25 system, and Emily, I know you love your directional trades right now. You're back, you're focused, all that, but your bread and butter is cash flow. So this one gives you a couple of different ways you can play it. Tackle 25 is a wonderful covered call opportunity. In fact, Matt, if you go to the trade tab real quick, and let's just talk a little bit about the liquidity in the options for BSX. Here we are, it's got weekly options, like, it's got liquidity in those options, penny spreads in many of the different option strike prices. And by the way, part of this pick is an homage to my buddy, Keith King, who reminded me yesterday in our conversation on the podcast that even when he just drives back and forth from downtown Boston to his house, he passes Boston Science as well as so many other big medical firms up there in the Northeast. Cover call returns, couple percent on 24 days right there. Even the September monthlies, you're looking at like 2.1, 2.2, 2.3%. This is a good covered call stock. I wouldn't start it out as a covered call though. The way that I would approach this one, Emily, I'm going to give you two things you love. This long-term analysis is leading to a bullish opportunity if we catch a breakout. That has to happen above 46. So could you come out today and just say, you know what, I'm going to slap a covered call. If it gets called out, you bet. I think that's fine. There's nothing wrong with that. I'm waiting for the breakout. I'm going to pick up shares, equity on this, on the breakout. And then when I get technical conditions like an overbought condition or a little swing rally into a doji, I'll then turn it into a covered call in a position trade style. I got a couple of months I could write covered calls before I've got to worry about the next earnings report. Good 2% plus covered call on a stable fundamental company that's now coming back off of pandemic lows where it was impacted like many businesses were, about to break out into an all-time high. This is Boston Science. It's my pick for Queen's Court today.
It's your pick. I do have something that could or may not help you. It's up to you. It's your pick. It's your head.
Let me see if you're holding the sword. You can't throw that at me without video up. I need to know if the sword is like in hand or not.
I don't have the sword.
It is on your shoulder, right?
I don't have the sword.
I would love to hear it, my friend.
The only thing I would say is it's been a volatile mess in this space for the better part of the pandemic, right? Healthcare has been great. Doesn't mean everything in healthcare is constantly great. You're finally recovering the pandemic price, but there's something that is starting to build out of this picture of volatility, because when you first look at the picture of technical analysis, you're basically seeing the entire story in 1 second, right? Mm-hmm. So you're immediately going to go to the most volatile moments of that stock's history, because that's just the way our eyes work. And we look at this and we look at this and we see a lot of chop and a lot of nastiness, okay? One thing you did just barely reminded me of something before the pandemic. Boston Science, and one of the reasons why we liked it so much on the Tackle 25 for 4 consecutive years, was the consistency that Boston Science had from a trending perspective. Would you agree?
Yeah, we love that part of it.
When you look at Boston Science over just this year, okay, and you remove the last 2 years of volatility, and you just look at the last year, you're starting to see a more constructive and consistent trend this year, circa before the pandemic. I love the potential breakout here, and I do share your same concerns fundamentally, right? But there's context there. Medical device company over the last year in the healthcare space has not exactly been where you want it to be. But as we move further into the future, you're going to tell me medical appliance companies aren't going to be vitally important?
Is going to be consistent. They're going to hit their numbers the way they have for the last 15 years. I mean,
So-
I have belief in that company.
I do too. But I do like the consistency over the course of the last 4 or 5 months. You break out. It's a clear picture above 46, guys. Like, yeah, let's call it 46 and a half, but it's a clear picture here. There's nothing there. It's a good breakout.
That is my pick, my queen.
Well, certainly
Now,
love.
if you have to kill somebody, I would still kill Tim.
We shall see.
The bull call analysis.
I need to know whether you snuck into the lab last night, Mr. Matthew, because we did talk about healthcare last night and we analyzed UNH last night with another stock.
I will tell you right now, last night I was playing Among Us and killing Tim, so I did not sneak into the lab.
The class had a choice. We were looking at UNH, and I can't remember what the other one was. I think it was Lilly, but we were looking at a pullback or potential breakout, and the class went with the breakout. Lilly hasn't quite done that yet. In fact, today kind of had a little bit of a pullback, so it didn't quite break out compared to UNH. But we did look at UNH yesterday as well, because we were looking at that healthcare space based on the news that happened yesterday, approval of Pfizer and all that good stuff. So, really, really, really a good space to have, defensive area of the market. We keep talking about, whenever we see, you have exposure to growth and all these other areas of the market, doesn't hurt to always have something, have something in your pocket that's defensive, and healthcare is obviously going to be one of those places. So yeah, definitely looked at UNH yesterday. We didn't go with UNH yesterday. However, I still like it for a bull call, but we got to look at Boston Science.
Can I speak to Lilly very quickly?
You can.
Lilly is a great trending stock, and it's one of my favorite swing trades stocks in the healthcare space. It's been that way for a long time. And I think a lot of people like Lilly because you can do a lot of different things on Lilly.
Absolutely.
Right? I mean, it's kind of like everybody's cup of tea to a certain extent. You want a swing trade, you want a position trade, you want a cash flow, you want to do some advanced options. Like Lilly just gives you a lot of ammunition there. United Health, I don't have the same feeling as a swing trade. It's like there's times you add, right? And there's times you take advantage of it. And I just feel like Lilly's one of those ones we're in and out a lot in Lilly. United Health something you're in from more of a position to investment.
Oh, yeah. For sure.
Yeah.
For sure. And it was more a preference of, breakout versus, a Cody special, right? And it was a class vote, but definitely did like UNH there as well. I gotta give Tim some credit. Go back to Boston Science for a second, because I remember how Boston Science made it in the Tackle 25, us having this discussion. And Tim has always been afraid of two things: elephants and robots.
Medical device.
Hence why the mascot for tackle trading is an elephant.
It's an elephant, right? And when BSX,
he has to face his fears.
Yeah, exactly. And I remember sending him a robot when BSX made it to Tackle 25, because one of the things we talked about was them making medical devices and them being robots.
Tackle, it's not just me.
I gotta give kudos to Tim for actually bringing up something that that triggers him. This is a company that could potentially make robots that end up being our doctors. So for him to actually bring it up is, I'm surprised you got through the whole thing, Tim, without panicking.
Thank you, Emily. I appreciate that. Face my fears. Yep, you bet.
Oh, but I do like that long-term chart going back to what it looked like before the pandemic, reminding us of BSX because I really haven't had it on, in my watch list for quite some time. So I really like it when I do get those reminders of things that I used to love to do, but then I kind of put them off the side and then you kind of forget about them because other things come onto your watch list. And you're like, oh yeah, that one was a good one for covered call. So that one was a good one for naked foot. So I really like that you brought BSX back to my attention. Oh, you guys are making this so hard for me. You did both refer to me as M. At some point during your analysis, you did not refer to me as the queen. So
I was
-1 on
holding the
both of you
sword
for
at the
that.
time.
Doesn't matter. I didn't see you. Uh, but I gotta go. I gotta go with an oldie but goodie. I gotta go with BSX.